Amid the signs of weakness in the Korean won against foreign currencies, the government and relevant agencies are stepping up their efforts to stabilize the foreign exchange market. Park Jun-han explains.
The authorities here are intensifying their efforts to stabilize the foreign exchange market as the South Korean won continues its downward trend against major currencies. South Korea's currency has fallen to an 8-month low against the US dollar, with the greenback closing the market at 1,483.61 on Tuesday. This is just 0.51 lower than the year-to-date closing record set on April 9th. Looking at the dollar index, which tracks the U.S. currency against 6 major currencies, the won has stayed in the high 1,400 range, even as the index fell more than 10% since January to around 98. Also, the British pound's value exceeded 2,001 during the day, hitting the highest record since the 2009 global financial crisis. The Bank of Korea recently explained that the recent rise in the dollar in asset markets stems from a supply shortage, where demand for foreign assets is increasing, but dollars are not being released into the market. According to the Bank of Korea's Financial Stability Report on Tuesday, individual investors from July through October showed a distinct opposite trading pattern, net selling 23 trillion won, or about $15.5 billion worth of domestic stocks, while net buying $10.3 billion worth of foreign shares. When net purchases of domestically listed foreign exchange traded funds, totaling 6.1 trillion won, are included for the same period, the concentration of retail investors' overseas stock investments becomes even more pronounced. The government signaled a strong commitment to cooling rising demand for foreign assets. Last Thursday, at a foreign exchange market meeting for export companies, Presidential Chief of Staff for Policy Kim Yong-bum summoned executives from 7 major conglomerates, including Samsung, SK, and Hyundai Motor, for an emergency meeting. At the meeting, Kim directly requested global exporters to cooperate by releasing their dollar holdings onto the market. On the same day, the Financial Supervisory Service warned major domestic securities firms of the toughest penalties, including business suspensions if illegal activities are uncovered. Securities firms have posted record-high commission revenue from January through November amid a boom in foreign investments and aggressive marketing, including zero-fee trading promotions. However, firms have been criticized for neglecting investor protection as roughly half of retail investors recorded losses. In response to the warning, some major firms have suspended fresh marketing campaigns aimed at promoting overseas investments. With just days left until the end of 2025, if this year's $1 exchange rate closes higher than last year's end rate of 1,472.51, it will be the highest year-end rate since 1997. Park Jun-han, Arirang News.